In this video, I'm going to talk about Carvana. This is the, company that, sells. You can buy used cars, right, online, and the customer experience going this route is pretty good. So I want to use this company to demonstrate to you how ridiculous and like literally from a mental institution the market is at both points of the extremes, right? So Carvana, like the chart from 2017, right, was about $13, right? And then it ran up to like 1,600% return. So it reached a high of $360, right? And then since then, it is down 96%. So at the peak, it had a market cap of about 30 billion. And then today, it has a market cap of about 2.5 billion, okay? Now, at the top, at 360, the brilliant genius analyst put a price target on Carvana. I mean, it wasn't at that point, but about a year ago, he put a price target at Carvana at $360. And 6 days ago, he slashed the price target from 50 to 15, from 50 to 15. So he thought it was a great idea to buy it at 300. He thought it was a great idea to buy it at 300. And now he thinks it's a great idea to sell it at these levels. I kid you not. This is a guy who's a professional, and with a straight face, this is what he's going to tell you, right? And now, from the market's point of view, when it was in 2017, 2017, the stock is around the same level. It was around the same level back then as it is today. Now, picture this. In 2017, they sold about 27,000 cars in 1 year. 27,000. In 2021, they sold almost 500,000 cars in 1 year. And investors were happy to pay the same price for the stock 5 years ago, when it only did 27,000 cars per year, than they are today. This is the market we are in. So I want to play you a video of when this analyst had a price target of over 300, and recent video how they slashed it to 15. So let's have a listen.
Shares of Carvana are getting a boost today after an upgrade over at Wedbush, and this is our call of the day. The analyst who made the call, Seth Basham, is here with us now. Seth, good to see you this morning here. Thanks for hopping on. Look, I mean, Carvana shares, they're down about 12% over the past month. What has caused that selling, and why do you think it might be over?
Yeah, thanks for having me. I think the stock has underperformed recently with concerns around the unit sales outlook for the company and for the industry as a whole, for that matter. We've seen volatility in unit sales based on industry-wide data from Cox Automotive, and we think that Carvana is part of that issue. That is due to demand volatility, but also production problems. What Carvana and others do in the used car industry is they buy cars from consumers or wholesale auctions, they recondition them, and then they resell them. That reconditioning process has been a little bit slower than normal because of labor shortages and other challenges. So we think that's slowing down our unit growth, and that's been the primary driver of the stock price underperformance recently.
Right, so you can see it here. upgraded to outperform from neutral. Price target raised to 360 from 350.
Longest season of the year. We're seeing dealers go to wholesale auction and other places to pay top dollar for inventory right now that they plan to recondition and sell through that spring selling season. So the question is...
Okay, so that's it for that. Now, let's listen to a video about 6 days ago. Same guy. Even though he's not in the video, I mean, it's the same brokerage house and he covers the company.
Also watching closely here today, shares of Carvana. They are moving on the day up by about 2%. We'll round that off too after Wedbush downgraded the stock to neutral from outperform and slashed their price target from $50 to $15 here. Now in the used car landscape, of course, there is this massive shift and the inventory concerns, particularly because even at the prices that used cars had skyrocketed up to, it's a larger question of where consumers are starting to push back on some of those prices and where Carvana, CarMax, where they'll actually be able to move some of that inventory off the lots that they've paid so much to be able to bring on as well.
Yeah, a $50 price target. Wow, that stock has come way down.
Oh, big time.
From a consumer standpoint, I bought two cars.
Okay, so I don't understand how a guy that's a professional can think it's a great idea to buy a stock at 360 and then not think it's a great idea to buy it at 15, right? So right now, people are panicking and talking about, oh, this company can go bankrupt, right? Because it has about $7.7 billion of debt. Like, even though that debt doesn't mature, doesn't have to be paid back until 2030, they think it's going to go bankrupt. Now, they didn't worry about that. They didn't worry about this debt, even though they didn't have as much, but they had about $5 billion worth of debt. They didn't worry about that when the stock was at 360. The company was also not profitable yet. It is not profitable now. They didn't worry about that. They thought it was a great freaking idea to buy the stock at 360. And now they think it's a great idea to sell it at 15 or 13 or not buy it. I'm not saying it's a buy. I'm just using this as an opportunity to tell you how people don't know what they're buying, right? Just like with all the other stocks that we have. Like if you use an example of Voxter, they were buying it for $1.50. They didn't know why they were buying it. And now they're afraid to buy it at 40 because they think it's going to go to 30 or 20. Like there's no reasoning behind anything. But these are the kinds of minds, brilliant geniuses that operate in this market. And that's why you see these kinds of freaking movements in the market. And now also with Carvana, what happened is that the founders or the insiders, when the stock was around 300 to 320, like one of the founder, he sold $3.2 billion worth of stock at that price. The analyst didn't worry about that. He even said that it was just diversification. And now, recently, the founders or the insiders bought close to $500 million worth of stock, around $80, and even recently around $20. They're buying the stock, right? He's ignoring that too. Like he ignored it when they sold it at the top, and he's ignoring it when they're buying it at this level. Now, as you can see here, Carvana is trading on New York Stock Exchange, right? So some of you are saying that with some of the companies like Voxter or anything else, all the problems will go away when the company lists on NASDAQ or uplists to TSX or even New York Stock Exchange, because the Toronto Stock Exchange is toxic. Like, look, Carvana is trading on New York Stock Exchange, and like TSX Venture doesn't have monopoly on fucking stupidity. It just doesn't, okay? As you can see, stupidity is widespread over there, just like it is on TSXV, okay? So, but this is the market that we're in. Like, people are looking for reasons to sell. They don't know why they're selling. They don't know what's going on with the business. They're just talk themselves into selling, just like they talk themselves into buying at whatever price. It didn't make sense back then. And I'm not saying that Carvana, the stock should be at $300. No, I'm not saying that at all. Like, I would really not be interested in a business like this because it's a low margin business. But what I'm saying is that just because the company wasn't worth $30 billion back then doesn't mean it should be trading for $2 billion now. That's all I'm saying, right? But I'm just trying to show you here the crazy, stupid market today. And that's why I am not responding or reading some of the comments on my YouTube videos, because some of them are so stupid. I cannot waste my time reading some of this nonsense and stupidity that's coming out of people, okay? But anyway, here's an example of the brilliant minds that are working on Wall Street. And I wanted to congratulate to the analyst on Carvana. I mean, you should win a Nobel Prize for putting a price target at 360, thinking it's a good idea to buy it, and now slashing it to 15. Congratulations. I am extremely impressed with your genius.